What's up everyone, it's Scotty with MoneyVest. In this video we are going to be talking about Polestar, ticker symbol PSNY. They are going to be reporting their earnings for the second quarter of fiscal year 23 next week on August 30th. So I'm going to break down everything you need to know for Polestar's revenue, earnings, everything. Well, if they had earnings, just taking a little shot at them. But as always, if you enjoyed, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below. There is a 16% annual discount available till the end of this month, so another 3 to 4 days left. I did open up a couple more spots if you're interested in joining. And again, taking advantage of all the member benefits, all the members-only private videos, intrinsic value spreadsheets, buy and sell alerts. Everything's going to be included with that 16% annual discount with the link down below. So this right here is going to be Polestar's chart, trading at just under $4 per share. Of course, it was trading at one point over $16 back in November 2021. It has dropped almost 80% from those levels. And again, they are going to be reporting earnings later next week on August 31st, actually not 30th, but August 31st. And revenue is expected at just over $756 million with an EPS of negative 12, almost 13 cents per share. So Polestar reaches production milestone of 150,000 as upgraded Polestar 2 deliveries commence. So as we already know, they've got a lot of vehicles in the pipeline that already have Polestar 2. They've got Polestar 3. They got Polestar 4 this year in 2023 launch. And then 5 and 6 is going to be launched in 24 and then 26 as well. So there's a lot of course, models coming in for electric vehicles for Polestar. And Polestar has started to deliver significantly upgraded Polestar 2. And that was a brand's first volume car, which went into production in 2020. Within 3 years, over 150,000 cars have now been manufactured. In the UK, where over 20,000 Polestar 2 cars are now on the road, Polestar has been the fastest growing car brand in the first 7 months of 2023, with new vehicle registrations growing by 174% compared to the same period in the previous year. So year over year, very, very significant growth here. These are some of the recent developments. A record first quarter delivered 12,000 vehicles, up 26% year on year. Generated revenues of about $546 million, driven by higher Polestar 2 sales. Intensified cost management with Polestar 3 adjusted start of production and tougher macro adjusted 2023 global volume. Expectations are 60 to 70,000 vehicles, representing an annual growth rate of 16 to 36%. Successfully unveiled, of course, Polestar 4, as I pointed out, 2023 is a launch, and they already did that at the China Shanghai Auto Show. Debut Polestar 3 in North America, export performance and design with Polestar 2 BST Edition 230, and launched a major update to Polestar 2 model year 2024 as well. And this right here again is the timeline. All these vehicles and different average selling prices for them as well. They are going up as they are launching more luxurious items as well, right? So luxury Aero SUV, $80,000 to $120,000. Of course, their Polestar 2 is like a sedan fastback, sitting at $50,000 to $70,000, and their Polestar 4 premium sport SUV, $60,000 to $80,000. Then Polestar 5 luxury sport, $100,000, and then of course luxury 2+2 Roadster at over $200,000. And these are going to be the ranges at over 600 kilometers with different factories located in China, in Europe, and of course in the US as well. So global presence in 27 countries, growth in existing and new markets, and these are some of the timelines for these launches, and locations from 120 to 143 globally now. Service points are now at over 1,100 as well. Revenues 21% increase, $546 million. That's really good. Gross profit also turned positive to $18 million, but those are very, very low margins for the company. We'll talk about that in just a minute. And cash and cash equivalents sitting at just over $884 million. But unfortunately, the company does have more debt than cash on the balance sheet, not to mention the company does also have more liabilities compared to all assets. So total liabilities are sitting at just over $4.1 billion for the company, with total assets sitting at just under $4 billion. And of course, the cash equivalent line was going to be over here, $884 million, with a little over $2 billion worth of debt as well. So that again is a little bit not the best balance sheet for the company, and that's something I've mentioned before. Is with every company out there, the main goal is to actually turn profitable. If you're not profitable, you're not sustainable, you're not viable long term. With a lot of the electric vehicle companies, they've done incredible marketing. They've done a very good job in kind of selling their story. But at the end of the day, it is turning profitable. That's the true metric for execution and being able to generate cash flow, generate profits with some decent margins is going to validate your market. If you're not there yet, yes, revenue is growing on very strong increase in operating expenses. I mean, revenues are going up because marketing is going up and they're launching new products. But eventually there needs to be a conversation around profitability. And if it's not there yet, then that obviously is not going to be an investable stock. So revenue here, 546 million. That's a very good growth of 21%. Cost of sales also went up 15%. So there's really not a lot of margin there, right? I mean, if you take a look, $528 million in cost of sales alone, right? If you do the math, 528 divided by 546, we're looking at a 96% of the revenue is gone for cost of sales, right? Only 4% gross margins. How do you go from 4% gross margins to actually turning profitable when you also have pretty significant expense for selling, general administrative expense, and R&D as well? That's why I think a lot of investors and people kind of underappreciate what Tesla's been able to achieve, right? Tesla's been able to achieve like 20% margins like on their cars. Like even more recently, they have dropped down to under 10% because of all the price cuts, but it's not easy. It's not easy when you are working, at such a massive scale and you are producing, manufacturing all these vehicles, all these factories, so much overhead. It's not that difficult. That's not that easy, right? So for Polestar, I think the biggest question over time is going to be, can they actually generate operating profit, right? Operating loss right now, 200 million, which again is a little bit lower compared to the same time last year. But the real question is, can margins expand? Can profitability come into the equation over time? This right here is going to be that EPS expectations. Again, negative 14 cents per share on $756 million worth of revenue. And they are not expected to turn profitable until 2027 at 15 cents per share. For the next 4 years, they are expected to generate losses after losses, and we're not going to have a P multiple. Obviously, it's going to be the negative, but then eventually 15 cents per share is what they are expected to achieve by 2027. So we obviously don't have a fair value calculation because if there's no earnings, there's no calculation. If there's no cash flow, there's no calculation for intrinsic value. Cash sitting at just over 884 million, as I pointed out earlier. Total debt, $1.77 billion as well. So they do have a positive net debt, which is not what we look for. Current ratio, quick ratio under 1, and debt to free cash flow is negative as well. So if you really consider Polestar from an investment, from a long-term investment standpoint, it's kind of hit all the check marks in the wrong way. Yes, revenue growth is there. Gross profit margin is really low. Operating losses, net losses. We've got balance sheet that's not that great. And of course, not to mention that their profitability is struggling at the moment. They're not going to be profitable until at least 4 years. At least that's what the analysts are expecting at the moment. So, that's where we are. If you take a look at share count, if you come to make matters worse, if you come over to the share count here, it has literally gone from a quarter-over-quarter basis from like 80 million to over 467 million shares, like massive dilution between first and third quarter of 2022. So again, significant increase there. Margins, again, not the best. So it's going to be a hard pass. I know there's been a lot of questions around Polestar. The thing is that Polestar's thesis is about as bearish as it gets. Like this is literally the worst for the company right now as about as it gets. They're moving in the right direction, no doubt. They're definitely launching new products. There are new lineups coming up with new models and revenues moving in the right direction. But at some point, we have to ask ourselves a simple question: can execution really happen? Can the company turn profitable? Right? That's the real question there. And if the answer is it's going to take a long time, if the answer is no, then you can trade it. But from an investment standpoint, it's going to be a pass for me personally. But that being said, from a technical standpoint, I've got a very strong support at around $3. It's consistently getting rejected at these lower highs. So we got these lower highs sitting right there, getting rejected. So if and when it actually does come down to $3, maybe I take a stab at it from a swing trading perspective only with a very tight stop loss below $3, because every time it gets down to $3, we see a lot of accumulation sideways, ends up rallying over 50-60%. So maybe there's a swing trading opportunity, but from an investment standpoint, long term, hard pass. I'm happy with my Tesla in the electric vehicle space from a global perspective, but let me know in the comment section down below, what do you think about Polestar? And eventually, if it does, kind of cross that bridge of profitability, then I'll look at it in a more serious way and kind of consider it from a long-term perspective as well. But right now, not touching it. Only will be looking at it from a swing trading perspective at $3. and we'll see what the earnings are going to be. As always, if you enjoyed this video, found it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below. 16% annual discount available for another 3 to 4 days. You can take advantage of that. As always, happy investing, and I'll see you all in the next video.